Hello. Welcome to Al Stock Trades. What's going on today? All right, guys. So I just wanted to make a quick early video here for you guys. So yesterday I made a video regarding OnStock, and it's a semiconductor play, and this company is free cash flow positive, net income positive, and here's your free cash flow positivity and growing, and gross margins are great. And I got a comment literally within a few hours ago saying, I think I was just waking up or sleeping, I don't know, but was saying 10% is nothing, right? 10% is absolutely nothing. And I wanted to dissect this. Obviously, we don't want to dissect it to a point where we're basically running into conclusions that the author of this text did not mean. But I guess in all humans we stereotype, but I think this is a very good discussion to talk about, like what is a good return on investment. Now, before I start, I like to introduce a fact. Again, I'm always data driven, right? I may skew to opinion driven in this video, but I am gonna just show you some data here. Okay, so this is the U.S. stock market returns, a history from the 1870s to 2022. And the annual real stock market return year over year, obviously there's some aberrations that were higher, and obviously there were some years that were low. But overall, there are more green than red. But if you were to look at the arithmetic mean, it is 8.4%, and the geometric mean is 6.9%. Okay? So 8% is actually a really good investment. And the way we were calculating OnStock, we were saying at least a 10%. Technically, it could go to $84.75, which is a 31% at a discount rate of 10%, which means that investment should yield you 10% every year at an $84 price, right? Which is why if you look at Ken Griffin, his average is around $82, right? So which means that he's expecting 10% around every year. We're lucky because we were like, oh, wow, this thing's below $84, so we can get a better than 10% return. But I set the price target at 75, given the whole economic reset of what's happening with evaluations, okay? It's definitely something that we need to discuss, just to dissect a little bit. So I showed you guys some data, and now I'm going to go kind of opinion based. Let me just answer some of these questions here on the live. I don't see why people don't understand they are sitting on a gold mine. I think it's because of the new investor mentality that everyone wants to get rich quick. Yeah, exactly. So I'm going to go into the opinions now, and that's one of my opinions that I share with the Real Coder 7 there, right? And then, Mr. Khan, do you even work as a surgeon now, getting free education on YouTube on the market? Yeah, I know, right? So actually right now I am submitting my applications, getting them ready for September of next year. That's going to be my application for neurosurgery. So yeah, I'm pretty much done with medical school. I just have a couple more exams. I know a couple of more exams seems like a lot, but I've taken thousands of, I don't know how many, honestly, I don't know how many exams I've taken. I've taken hundreds of exams. I know I've taken more than 100 exams, and I've taken more. I've done more than 30,000 questions. So yeah. So these other exams, these are nothing. I know one of them is step 2, but that's nothing. I'm gonna destroy the crap out of that exam. But yeah, just a couple more things and rotations, and that's it. I'm done with third year. And I told you guys third year was, I think, the hardest. But yeah, going back. Yeah. So if you go to, let's say, an apartment complex owner, my future father-in-law, he does real estate in commercial. and he does apartment complexes, and he does a mixture of between. He started off Class C, then he moved on to Class A apartments, Class B, but Class C is a little bit older apartments, gives a return of anywhere between 10 to 12%, maybe 10%. So, but Class C carries some risk because they're a little bit older apartments. They need a little bit more maintenance. They're not your pristine 2020, 2022 apartments where you just gotta sit down and collect a check. You get high rent, but the thing is the cost of the building is offsets that, so the return is anywhere between 5 to 6%. Right. And that's called your capitalization ratio, which we'll teach in the future. It's just right now, I'm not a master at it yet. I'm learning, and I'm learning from people that have done that have done the job, and I got to do it first. So, but I digress. But again, it falls back into the 10% is nothing. This is, in my opinion, a wrong mentality. And I'm going to stereotype here. I could be wrong. I'm going to stereotype here, and I don't like to do this. But again, I want this to have a lot of comments. I want people to comment down a lot here. Okay. I want to let's have a discussion about this. Right. So from what I'm understanding from you, you're coming off as a newer investor, right? You're coming off as a new investor mentality. You probably started investing in 2020, right? That's what you're coming off. I mean, I would say there's a 70-80% probability you're like a 2020er, right? That's what you were born in the stock market in 2020. And you don't know the history of the stock market, given that it's returned on average 8.4% year over year from the indexes, right? Obviously, there are other folks that about that have returned 30% year over year, or some funds like Renaissance that I think they've done like 40%, I believe. But the thing is, that's actually really rare to do it year over year. Now, obviously, could you get some high growth stocks? And of course, that's one reason why we talk about, for example, Clover, right? To Clover, I understand your comparison. 10% is nothing to Clover. But then you would have to look at other things rather than the rate of return. You would have to look at the risk. What is the risk of On stock versus what is the risk of Clover Health stock? Well, it's painted beautifully here. On stock is net income positive in the billions. Clover right now is still net income negative. I mean, they're talking about EBITDA positivity. That's not real net income positivity, guys, right? Free cash flow for Clover is negative. I mean, it is a little positive now, but on the yearly, it's still negative, right? Free cash flow for On is in the billions, right? So what I'm trying to say is the risk that this company will die is quite lower. Hence why most people would buy the stock at around $64, $65. Now it'll easily go up to 65. I mean, we talked about it when it was 64. We talked about it here, and look what happened. It went up to 4%. And now it's hopefully going to track back up slowly to my 75, and I pocketed an easy 10%. So I'm going to stereotype one more. 10% is nothing for you, maybe because your bankroll and your income in your portfolio is small, right? So if you have, let's say, $50,000, 10%, that's 1%. 10% is $5,000. So then maybe that might not be a lot, right? Versus someone, let's say, who, for example, who has $5 million, 10% is 500,000. So imagine, making 500,000 every year as an investment, and then taking, let's say, half of that and reinvesting it back in, and the other half living off of it and enjoying it, or just saving everything else until retirement, right? Your comment, and I'm speculating here, is suggestive of someone who's new in the stock market, who doesn't have a lot of money, and who is a new mentality, as what the comment was saying down here, the comment of a new investor mentality of wanting to get rich quick, right? Because the thing is, let's say, for example, you do have $5 million. You wouldn't think 10% is nothing, man. You wouldn't, because you would be thinking about the other thing. You'd be thinking about the conservation of wealth. You would be thinking about, how can I preserve my millions of dollars, right? So, it's good to have, 10% of your, stock elite, the most in speculative stocks. Now here's the thing. Have I broken this rule with Clover? Yeah, I certainly have. I've definitely broken this rule because it's dropped down more than the stock price. I mean, it's dropped down more than what I've seen. And I know in five years, I mean, this isn't easy. Just let's say, for example, Clover will never reach more than $13. That's fine by me. That's more than a 10x return, right? Now, there's other people that'll say, let's say, Al, I bought at 8, I bought at 15, I bought at 11, and I'm still holding at 11, and that's only 10% return to. Okay, well, that's your fault. I mean, the stock's been at $1. I mean, why? There's something called dollar cost averaging, right? I mean, if you don't believe in something at 8 and it's like 90 cents and it's gotten better, I mean, and it's been here in 90 cents for almost a year, more than a year, and you haven't decreased your average. So I know stock market people. I've been in this game for quite some time. Idiots come and idiots go. There are going to be people that are going to be like, hey, Al, you're celebrating $10, $12 in Clover. Well, I'm still holding at 15. Okay, well, that's your fault. You're the dumbass who didn't buy at the 90 cent, right? So don't be that future dumbass, right? And again, this is not financial advice, just my opinion, right? And again, 10%, it's nothing depending on the trade risk and amount. Absolutely. But 10% for a stock that has no volatility is gold. I mean, look at the stock, right? It's a good stock. I mean, look at this. It's a beautiful stock. I think it's only going to get better. $28 billion market cap in semiconductors. It just recently fell. They sold it at 100, right? So when I say they sold the insiders, so I recommend watching the video. I think it's a very good video, right? But again, in my last point I wanted to make, I didn't write these down. I have them in my head. My last point I wanted to make is this just shows me that we really need an economic reset. We really need to flush this mentality out of the stock market. Stocks need to drop like another 50% just to erase this mentality, so we can we need a reset. Honestly, we need a reset. There's a lot of people hoping, and there's a lot of people that I'm sure. Look at the AMC crowd. There's a lot of people out there that are just waiting, and I'm hoping Wall Street does its magic to kind of flush these people out, because this is kind of like what we need so Wall Street can start the game again. So we'll see about that, right? But overall, I believe 10% is a great return year over year. That's a wonderful return. Wonderful, right? Obviously, when you do an intrinsic value calculation, you're expecting to do more than that. Do I believe On stock is going to grow more than 10% in a year? Hell yeah. Of course, right? I'm just saying a lower price target. I'm saying here. I'm saying right there, guys. This is what I'm saying. It was at $100. I mean, it's going to go back up. That's for sure. Like, right? But I'm just saying that, these are nice little swing trades that are backed by intrinsic value. Now, obviously, if they're under a year, then you have to pay higher taxes on them. But you can do some tax games and offset those. But that's a different video, and the CPA. But that's all I have for you guys. I just wanted to just dissect this mentality, because this mentality is what makes people go broke. 10% is really good. Go buy an apartment complex, go buy a business. A 10% return on your investment is pretty damn good. It's pretty damn good, guys. That's a pretty damn good investment. All right, ladies and gentlemen, that's all I had for you guys. Just wanted to just throw this out there again, just to kind of a little different, response. I don't mean to upset you, Keezer. I don't try and stereotype you. I loved your comment, right? It's a good discussion, and I think it's a discussion we need to have to set expectations. because whoever tells you that you can get 100% return year over year or 1,000% return year over year is lying to you. And if you don't believe me, look at 1872 to 2022. He's lying to you, okay? Or she, whatever, okay? All right, guys, and I'm not going to lie to you guys. This is not, we try to keep it data driven here, okay? Like Chief Jerome Powell, data driven. I've been saying that before he was saying that. All right, peace out.